The tax rules in Jersey are different to the tax rules in the UK. So when we're talking about an individual leaving a jurisdiction such as the UK, they first need to think about actually, are they leaving the UK? So from a tax perspective, are you ceasing to be UK resident? Okay. So the residence rules are quite complicated. We do have what's called a statutory residence test, which gives us a great deal of certainty now compared to where we were a few years ago. However, there are a number of wrinkles within those rules. So people need to actually consider those statutory residence rules and think, well, actually, can we make this work? Before considering whether you talk about Jersey and Jersey tax, if it's truly a tax-driven move and it's a material consideration, people need to understand those rules and actually take advice on those rules. Secondly, from the Jersey perspective, common issues that people need to think about are actually your moving jurisdiction. What impact does your business have? How is that going to be taxed? How's your income going to be taxed? There are some opportunities that can be taken advantage of before people come to the island. At worst, by taking advice and thinking about your circumstances, at least you know how you're going to be taxed in Jersey. But there are some opportunities around some tax planning that can be undertaken before you take any active steps to assume Jersey residence. And I'd recommend that individuals think about taking advice before they actually take any steps. If we're talking about a move from the UK, firstly you need to think about the UK tax considerations. Secondly, you need to think about the Jersey tax considerations. Jersey operates a different tax system to the UK. I'll deal quickly with the UK. The principle, the first principle that you need to think about is actually breaking UK residence. Can you, with what you're proposing to do, break UK residence? A number of the taxes in the UK are predicated on the residence of the individual. So, for example, income tax and capital gains tax are what we term residency-based taxes. So the differentiator is where the individual is resident in the UK, there's a different tax treatment to where the individual is non-resident in the UK. When we talk about Jersey, it's crucial that individuals take advice before they take any active steps to become Jersey resident. Firstly, to ensure that they're reviewing their affairs so that they know what the impact of them moving is going to be. But secondly, there are some opportunities that can sometimes be taken advantage of. So there is some what we call pre-residence tax planning that can be undertaken.
You mentioned the new statutory residence test, Garry. What difference has this new test made?
In a nutshell, the statutory residence test has made my working life a lot easier. We now have a lot more certainty when we're dealing with individuals who are leaving or have previously left the UK. The test came in 2013, in April 2013. Prior to that, we were reliant on very old case law. Now we actually have the rules written down in statute. They're not perfect. There are still some areas of subjectivity that need to be considered. But now we can say with probably 80% certainty how people can leave the UK and how people can continue to be regarded as non-UK resident. There are issues that do need to be considered around accommodation, around work, around family. However, we can give a lot more certainty to those individuals who've moved out of the UK and who actually want to know how much time they can spend back in the UK. The really important thing when you're talking about residency is maintaining records. HMRC, if they do question somebody's residence, will want to see evidence of time spent in the UK, purpose of visits. Where we've seen issues in the past when HMRC have asked the questions is that we've had to spend a great deal of time working with clients to actually obtain those records. So we advise clients to maintain contemporaneous records, diaries, retain evidence of travel. There's a list of things that you do. And given the amounts involved when we're talking about UK tax and the consequences, it's an investment worth making.